That's Nifty 25,761, and our focus for the session today, primarily because of the two we track, the Nifty and the Bank Nifty. The volumes, however, little at this time of the day in the day of the week, which is Thursday, are in the Nifty Futures. So we'll keep an eye out on this 25,750 zone, 25,740. I hope everyone has booked those puts. That was the only trade available at the open. And I do hope that you got yourselves into that trade and have booked some profits out of it. I think we are set up at a very interesting point over here. Perspective being that this is a neutral extreme from yesterday. And though we opened up above the neutral extreme high, there was no IB3 in the tape. There was no intent shown by the market to put price above the value area high and above the range of yesterday. So that was the door which was open for demand, aka buyers for the open. They did not show up. And when one party does not show up, there is no vacuum ever in markets. When one party does not show up, the other party understands and sees it and starts taking control, which is what gave an entry to supply and the reason for the drop from 25,840 to about 25,740 as of right now, the C period 10:34 a.m. So that was the easy move, and that thing is done. We are still around here at 25,730, and if I just draw up that market profile chart, this is of a big interest to me. So one is I'm definitely seeing the tail in the A period, which is above the highs of yesterday. And you all know when there is a tail in either the A periods or even the B periods, the VWAP of the day becomes the most important reference point. Is this market trending down for now? Is this a trend day? It's a little bit early to decide on that because it's still the C period, 10:35 a.m. We will know for sure only when we are in the D and E periods. And knowing for sure would mean that the market continues to make a lower low in the period, which is the D period between 10:45 and 11:15 a.m. So you need to be watching that to see if this market wants to trend. But for all practical purposes, the path of least resistance, the easier move for the market is on the lower side. And to continue holding that bias, you'll have to watch this green line, which is at 25,804 at the moment. As long as price stays below this point, 25,804, you can safely say that supply is in control of the market and the path of resistance is downwards and the market is expected to go lower. Now, I just want to clarify, a small bit of information on the volume. So even though the move lower is there, if you're looking at the A period volume and the B period volume, I'm seeing 7,830 contracts traded in the entire 30 minutes, the first 30 minutes of the session. So that's 7,830. And I just want to take your thoughts back to about 2 weeks back. It was a Tuesday morning when that US-India trade deal was announced. Those very first 25 seconds of the day, we had traded 45,000 contracts. 25 seconds of the market, it took for us to get those 45,000 contracts. And contrast that with what we are seeing right now, 7,830 contracts in about 30 minutes of trade. So in comparison, that day in 20 seconds, we moved 250 points in 20 seconds. Today, we have moved about 100 points in about 40 minutes or 45 minutes, from 25,860 to about 25,760. So what is the short message over here? The short message is very simply this, that volume is the driver of price action. and this does not work for a lot of traders who are, those price plus indicators type of traders. But if you're the kind of person who understands auction market theory, you're the kind of person who understands market profile, you would know that beyond volume, there is no other thing which decides price activity or price action in the market. So I like to think of this in terms of, a car with about, 5, 6, nowadays we get 8 gears also. But sometimes you are forced to drive in the lowest gear, gear 1 or gear 2. And the situation on the roads is such that you have to drive at the lowest gear. And today was one such example where we were driving on gear 1, but still the road, okay, was very clear. And as long as you stay to your path, the gear does not matter if you are on the right path. Some days the highway is going to be super smooth, and you would be able to drive at about 140, 160, 180 also if the roads allow it. The law also allows it, do it. But sometimes you have to get used to a slower pace of the market, and do not fight it, do not force it, and make sure, okay, that you are adjusting to the situation of the market and not putting your views on the market or not putting your demands on the market. The way I go about doing that is when I see volume dipping in the market, I widen my stops, I hold my trades for a longer time, and that has worked for me historically over the years. Just a little bit of adjustment because the volume in the market is a lot more lower, right? So 2 points over here, volume is lower and the path of least resistance is downwards. The market is showing a bias for the south side, and you could lose money in the market by not adjusting to the flow of the market. Now I'm back to the market profile chart, and what is of interest to me around here, I'm not going to take a trade. I'm not going to take a trade because it's in the C period. I'm waiting for the C to get over. But what is of interest to me is if this market comes back into this 3-day composite right around over here, where the market has made a previous balance. So I will not consider yesterday's profile, but will merge the 3 previous days profiles. And if I merge those 3 previous days profiles, the value area is right around here, 25,740. The POC is around this 25,740 zone. And if we see an auction below this 25,740 anytime during the day, we get back into this composite, then we could drive down lower to 25,660 and 25,600 also. Remember, 25,660 in the Nifty Futures is your FA, failed auction of yesterday, and we should be looking to first test that if we get a substantial dip in the D period. For now, the stop loss would remain that VWAP, volume weighted average price. But if we get a lower low in the C period, and you can technically still hold that short trade with a stop loss of VWAP, but I would wait for a fresh entry with D making a lower low, and my target would be this FA visit at 25,660, and beyond that, that cover order which came in at 25,600, that is the objective of the market. But if we do get in going inside this 3-day composite and we are below this FA, then the auction opens up much lower towards 25,450, 25,440 by virtue of it getting adopted back into the 3-day composite also. So keep an eye out on that. This is the merge profile you got to be paying attention to. It's in the Nifty Futures. I'll just merge this up for you, and this is the POC right here, 25,740. If we come back into this, then the FA zone, the VWAP, and much lower down towards 25,450, 440 is the next destination for the trade. Today is Thursday, and most of the Nifty Futures volume is going into the BSE. The Sensex options is going to be attracting that volume today. It's not a measure of lower trading activity. It's just a flow of trading capital from one instrument to the next. and some of the focus into Sensex options, etc., would be the reason why we are seeing the lower volumes in the Nifty futures. Right. A small housekeeping point over here. We are still okay on the road towards getting our Sensex order flow, the options activity sorted. And I wanted all of us to have a small understanding about the kind of work we do and the reason for that delay. This being because we work on exchange information, on exchange data, and all of our flows, our setups, our structure are exchange specific, and no two exchanges are alike, and the way they send data to us is very, very different. So when we started working with the order flow on BSE, we saw, okay, that there was a lot of change in the way they were sending data, and that change was of course compared to how we were getting data from the NSE, the National Stock Exchange. Our ways of doing order flow are not the same as what is widely done outside. A lot of people outside would take an order flow mechanism which is dominant, say, in the US markets, and bring it to India and say that this is order flow. We do not do anything of that sort. We know that all exchanges are different. We believe that there are different ways the exchanges give data and information to its members, and we are cognizant of that. We are aware that every single exchange works differently. So for BSE, we have created an entirely different engine, an entirely different mechanism of seeing the order flow, which is per the exchange norms, which is per the way they are sending data to us. So it's going to be very, very different, and that is why it is coming in a bit more delayed than what it was initially intended to be. But when it comes to us, when we start working on Sensex options and Sensex futures, know this for sure, that it is going to be a boutique product. It is going to be made specially for the BSE, and you would have the most accurate data coming in for bid and asks. I believe, and this is my fundamental understanding of order flow, that it is better to have clear, clean, correct data than wrong data when it comes to bid and asks, and bids and offers, and where buyers and where sellers are stacked. I see this happening a lot in the marketplace, and people are confused with their order flow charts. My understanding is it's better that you do not have a order flow chart than having a wrong order flow chart on screen. So when you're seeing an order flow chart, the buyer has to show up where a buyer is. The seller has to show up where the seller is. There's no point picking up something which is available in the US and then saying that this is an order flow chart. At WeTrender, we will never ever do something like that. The data on your screens would be the data which is coming off from the exchange, and that's why you would see the buyer exactly where the buyer is, and you would see the seller exactly where the seller is. Short point, the BSE is a work in progress still, and we are still waiting for the QCs to be passed and everything to work prim and proper as per the exchange requirements and the way the data is coming to us. But when it does, we'll have an entirely new engine for BSE coming to us. But be that as it is, if you're trading the Nifty futures, most of the volume is in the Sensex today, and that is why some of that volume information is not showing up in the market. But the market is still headed lower, the Nifty futures, and I would not suggest a long trade over here. We are seeing the market wanting to dip, and as long as we stay below the VWAP, which is at 25,760, keep the bias lower, and we will look to take trading opportunities lower on this move over here. 25,900 PE is what you track. We earlier had a trade in the 26,000 PE. So the earlier intent did not come into the futures. Right at the open today, the earlier intent was in the in the money puts. And for me, whether I see it in the futures or I see it in the deep in the money put, the delta is almost the same. So something like a 26,100 put or 26,000 put when a Nifty spot is around 25,700 would have a delta of about 0.75 to 0.80, which is 75% of a futures contract. And if this 75% in terms of volume is 3x of the futures volume, that is the same thing as 0.75 multiplied by 3 is about 220. That's the same thing as two futures contracts. So 3 becomes 2, and the signaling becomes the same thing as a signaling in the futures chart. So the intent in the money put makes sense to track, and this is one of the first signals we got at 9:27 a.m. And when this signal came in, we initiated that long about 232 because there was a previous IS30 to negotiate down over here somewhere. There was a previous IS30 in the put to negotiate, which had come in lower. So that was the reason the put was taken around 235, and we chose to go with that option and take that market up over there. Previous IS3 was here. So this was 235, right around over here. And we chose to go in with the option when this POC and this 233 low of the IS3 was crossed. It was a conservative option, but the market was still hesitating around that neutral extreme zone. It made sense to wait a bit and take it. But once we took that trade, it was an almost certainty that it was going to go higher, and all we had to do was stay in the trade and keep going with that thing. So this is 303 right now. It's above the IBH, which is around 270, and as long as we stay above this, these IS30s have been negated, and we should be looking to see if this market wants to go up further out over here. So I keep these 30-minute time frames of the P also on screen, and they give us a very good indication of where the market is putting the activity or the volumes in the market. The NTM Volex. So the NTM Volex is the blue purple. So purple above blue, and blue going almost 45 degrees. That's your classic sign to stay in that long put position. Tells you supply is greater than demand, but it also tells you the 45 degrees that supply is majorly imbalanced when it comes to the demand. Demand is not showing up in the market. So contrast this with what was happening all through yesterday. We had a VXR which was around 1.28 and went right up to about 3.7, 3.4 all day. But today the VXR is red and purple is above blue. So it's the changing fortunes of the market. That's why I do not want to keep a lot of bias from previous sessions. And we believe in keeping the bias in the market one day at a time. Every single day the market gives you different information, and it's no longer correct to trade on what was the bias of 5 days back or even 4 days back, because every single day the market is giving you different information. There is no major trend which lasts for more than 5 days in a market. So this is where we are. As long as purple stays above blue and the VXR is in red, I would stay with a short bias. I would stay with a long put bias. You can short calls. You can trade short futures. You can be long put bias via long puts. The only way you lose money quickly in the market is by going against the data on screen, and you can lose money if you're getting into long calls or shorting puts when the data and flow of information on your screen is showing you this. So try not to do that. It's not good to be a hero in the market. What is good is to be consistent in your understanding of different data signals. I'll just pause here. I'll take a few questions if there are. How do you read VXR? So VXR is, Shalab, is not a read on the volumes. It's a read on the bias of the market. The read on volumes is always going to be the order flow chart, which gives you the data in the top row, the volume row. I always keep an eye out on these top rows, which are contract driven. This is the volume of the market. The VXR and the NTM Volex is your bias, where to be long, where to be short, and whether you can be aggressively long, aggressively short. That is what this chart shows you. But the proper interpretation of this is how much strength or how much control the buyer or the seller is having in the market, and that would be always compared to the size of this VXR. So if the VXR is about 4x or 5x compared to the calls, that means the imbalance or the domination of supply is 4 times more stronger than the domination by call buyers. You can look at the market profile chart and click. You can look at the market profile chart and right click this, choose display info on right chart, and you would get a sense of the volumes which are coming out over here, and letting you see where these volumes are relative to the time of the day. So this is one chart, okay, which I keep. You can also keep your volume chart, which is your 5-day volume and 14-day volume via the speedo. So Nifty is at 73. 73 is a very low number compared to the volumes of the market. And as we rightly pointed out a while back, it's not that the participation is low. It's just that the participation is being divided between the Nifty and the Sensex. And some of the traders who would otherwise trade the Nifty today are putting their money to work, putting their capital to work in the Sensex options. But a speedo of 74 will tell you that the volume is about 30% lower than the average volume at this point in time across the past 5 sessions. 5-day volume is 67%. That means 33% lower at 10:54 a.m. compared to the previous 5 days. So I hope that answers. For me, the market is very, very clear on what it has to do over here. We are in the D period. I'm looking for a D below the C period. I'm also looking to see if this market wants to probe back towards VWAP and see if it gets supply back at 25,800. I would definitely not look at any kind of contra longs over here. They could work for you, but as part of the process in terms of what we understand the market has done since the morning, I rather wait for a pullback to short into the market than do a contra trend long at this place and this particular time in the market. So I hope this clarifies and we are clear on the roadmap ahead. Eyes would be on this 25,740 zone to see if we get initiative supply over here for the rest of the afternoon. If it does, we go visit that FA and we test that 25,600 lows also. That is subject to supply coming back into the market. So I hope everyone is on board and clear about what is the path up ahead. I'll switch it back to the order flow chart, and if there's anything else to be added, let's do it via the text chat.